to XM live trading session in the beginner's room for the risk management course session with me. My name is Junaid Vahid, trader analyst in Forex instructor. Started trading back in 2011. My trading style is price action swing trading. I trade also day trading or short-term trading, analyzing fundamentals, price action, and sentiment to generate idea. Depends on what idea I generated. Based on that, it's basically clarifying if I'm going to hold a trade for longer or short term. I can consider myself as trend follower, also reversal trend trader, rarely counter trend trader, but I open some counter trend trades for different reasons sometimes, rarely for uh, hit and run profits, like rarely for profits, mostly for hedging and different reasons, but it could be also for profiting if the setup is great with high risk to reward ratio. So I'm really focusing risk management. I really want to teach and share as much as information about risk management because I personally believe that this is the most important aspect of trading to manage the risk. As a retail trader, we are mostly opportunity hunters looking to take risks. Every single opportunity that we get in the market is actually risk that we are taking. So that risk must be controlled. If we don't control the risk we take, we can lose more than we can win. So if everything is controlled and we know what we are risking, we know the quality of the opportunity that we are getting, there will be a high chance for success in the long run. Risk management, should not be considered as something that we trade by trade. It must be considered as um, the core of the trading success. So the strategy, the entry and exit strategy must be attached to risk management and not vice versa. We should not mainly focus on entry and exit and just a little bit attach some risk management on this. If you cannot understand what that means, I mean, the core principle for success should not be head and shoulder neckline breakout for you. It must be the risk to reward opportunity, the risk profiling of that idea, the trade management, taking small risk and trying to make big profits, increasing the profit potential without increasing the risk. This must be actually the core of your trading success and not the tight consolidation breakout. The trend will continue, price action pin bar. These are just what basically can help you to enter the market and maybe some information to exit the market, and you need to be really strict on those. But what happens in between and before that is actually what makes the money, not the action itself. The action itself is just, you know, helping the core reason for success to work, which is risk management, and trade management, which is also risk management. So a lot of things that we call different names, for example, market analysis, is actually part of risk management. Why do we analyze the market? To generate idea and create expectations for the price of any asset to go in a certain direction. So we basically eliminate or reduce the risk for the price going the opposite direction, which means that with our analysis, we are trying to reduce the directional risk in trading. Then we check the volatility, we check the news, we check the economic events, and all of these things are creating again expectations for high volatility, low volatility, or supporting the direction. All of these are just analysis to reduce some part of the risk. Okay. So in this session, we discussed all of these angles. We talk about risk management on how you came across to trading business, what you believe trading is. This is again risk management. Um, two simple lot size calculations. So we try to touch absolutely every single aspect from risk management. So before I dive into discussing basics and give some examples of my recent trades for the viewers that are joining that we traded all together, I want to say a big hello to all of our YouTube viewers today. Great to have you guys. And if you have any questions, you can always share your comments and questions in the comment section. If you want to directly join our session in the XM, feel free to do that. Join the XM live and keep watching the session about risk management. You can ask any questions you are interested in related trading strategies, risk management techniques, calculations, and anything. I'll try to answer your questions the best possible way. Okay. And for our XM viewers that are right now in the beginner's room, you can guys ask anything you are interested in. I will take your questions seriously, and I'm going to try to answer everything you are interested in. All right. So Most of the time we talk about risk management, but not every time we are focusing on the risk management. If our core trading idea is not related risk management, then most probably is going to be neglected at some point in time, like opening the chart and starting analyzing the markets. So what is the most important thing here when we open the chart for traders? It's not risk. It is where the price will go. If this is the first question you ask yourself, there is a high chance that we get some problems in the longer term and trading, generating ideas. Why is that? Because it's very attractive, very interesting. If this price is going to continue to go up or it's going to come down, what's going to happen? There is going to be a pin bar. This means that the price is going to go down. Let's sell. That's attractive. So when we are trading, we should not consider only the direction. Direction is important, of course, because that's going to be the thing that is going to activate the trade in and different scenarios for trade management. But before the direction, we need to ask what is the risk with this instrument. Is there anything that can be traded here? Like if we generate the idea that potentially price is going to decline down, what are the risks with that? Why the price can continue, let's say slide down? Why the price can break up? Do you have any high convincing information on this? Is it fundamental, technical, sentiment based, some data based, fact based? While if the price is going to go down at the resistance, did you check the commitment of trader reports, the large speculators selling mostly? Is there any change or any fundamental factors you expect to support that bearish decline? What actually are the confluence of the information that you will be looking to sell this instrument? Some trader says I have a lot. While the problem there is that you might miss something else. Why we can't know everything, so, right? So if we generate trade idea that price is going to go down, high probability, we should not get attracted because the setup is very big, very nice, very strong. What a great pin bar at resistance. I need to sell it. Immediately, you go and you click the sell. This is chasing directions. So I'm chasing opportunity with great risk management, which great risk to reward. So if I see this idea, be, before I get attracted that this is going to drop down or is going to go up, I'm asking myself, what is the risk to reward? Okay, what does that trade worth it? So I need to find the potential invalidation level. So which means that if price goes up above this high, should I invalidate that? Is it actually end story for me? No sell opportunity here. It's invalidated. Or what exactly is the level that I will say this trade was wrong, that I'm not going to get panicked. I'm not going to be, having revenge trading, no ego push there. What would be that level? Is it going to be some previous high, this high? Why? So it's not, I mean, I choose this. You can't just choose levels. You need to be guided by your trading method, strategy, system, whatever you call it. For example, if it's pure price related, the price is getting up right now. There's a high chance that it declines, let's say generating idea for a pullback. But if I'm wrong with the pullback expectations, what's going to happen with the price? Well, probably will go up, right? Because if it's not down, stays flat and it's not down, then market might actually go up. So there is only two direction. The sideways is just slowing down that process of going up or down. So which level for me would be the level that I am not expecting bearish decline anymore? Well, there are a couple of different ways. So this must be guided by the price action, by your trading strategies. If you are Wyckoff trader, it must be by the Wyckoff method. If you are wave trader, it must be by wave trading. If it's a classic price action, it must be by the classic price action information. Giving example, if this closes as a pin bar and it's daily chart, we have plenty of time until this candle closes. So we don't know if that's going to be a rejection at all. It could be rejection before the US market, but after US market opens, it can actually go up significantly and closes like a big bullish candle. We don't know that. So trading this candle is basically not correct on the daily chart. But let's say I see this level as very strong. I want to see the price declines down. I can use the big bearish momentum candle, massive candle here. as the candle which I believe that it's going to hold the price, because historically this was the place where the big money flow came into the downside, which means that there were more sellers than the buyers, then the price slide so much to the downside. And I think that in this area, market will remember that, and it's gonna be the area that I can say I can wait to see if it's gonna slide down. Everything above this level, I am not bearish anymore. All right. So if that's the case, I know where I'm gonna place my stop loss. I know where is gonna be my entry. Current market price, I would like to probably sell because I generated that idea, and exit in validation level will be here. Every idea, trade idea, it's that we are expecting, usually means that we are expecting price to go in a certain direction. But that certain direction cannot be endless. It must come with some expected profit potential, right? If it's going to be just 10 pips down, makes no sense. It's so volatile, daily chart. I mean, there is no way you trade without expectations for what kind of money you can make from this, what kind of move you expect to have. Many traders says, I don't know. If you don't know, that's a problem, because you cannot measure if that trade worth it. Okay, I've seen many traders like this. They call themselves swing traders, and when you say, okay, you are a swing trader, but you don't know how much you can make. Swing trader in that uh, jargon way, let's say, means holding the trade more than 1 day. That's what it means, swing trader. Swing trading can be this trade can stay here for 7 days and might not move in that sideways consolidation, and you are still a swing trader, but nothing happened. And will you consider closing it? What will be the target, price target? Or because swing traders are not having time targets, some traders have, of course, depends on the trading style, but you should have always, guys, very important part of risk management. You should have expectations for levels, for prices, that you expect the price to go there. And when it goes, you will be ready to take the profits. You might have options to hold. This is something else. Like, I expect the price to come to the previous area where it fluctuated. This is great target. Like, great, good that I have a target there. I know in which levels I can start watching profit taking, because I cannot hold it endlessly. There must be some time that I will book profits. If I will hold it endlessly, do I expect price to go to zero, or what actually is the goal there? If you say I don't know, what is the problem with that is you cannot worth your trade. You don't know if your trade is high quality or not. That's the problem. Why is that? Because you have some invalidation level. You have the level where you are not bearish anymore, but you should have level also where you might not be bullish anymore. Which is the level that you are not going to be bullish anymore? Because that could be the level where the price could return, or it could be before that, or it could be after that. What price behavior would be important for you to show you the change? You can say bullish reversal, saying anytime when the price is dropping, if it gives me a bullish reversal, call it a pin bar, support rejection. I don't know if different traders have different way to measure it, or some indicator. That's going to be the exit. But if you don't know how much potentially you are ready to risk to get that profit, this is a problem. Okay, most of the time those traders closes trades in an unexpected way, not prepared. They are getting panicked. Price goes in a very great profit, but they don't know when to close it. They just try to. They let the profit taking to their feelings and the future price movement to something that they are not prepared. Okay, so we will see. We will see. It's not good plan for business, for any business. We will see. It's never a good plan for any business. If you have plan, but you want to see the reaction of the opponent, let's say, like in this case, it's market, but you have plan to reaction plan, then okay, let's see what market does, and I have this and that to do. But if you have no idea, that's a problem. So with me, let's see what market is going to do to the previous area where the market fluctuated. Let's call it a resistance to support. Let's see the bottoms where the market did a real reversal, which is these lowest prices. And maybe I'm going to use some wave trading. I'm going to measure some Fibonacci. Maybe I'm going to use some historical levels back from years before, right? There must be something that will show you profit potential. And after that, you will be able to measure, to ask yourself, does that idea, trade idea, worth it?